Hi everybody, it's AJ speaking. Today is the 1st of August. Just wanted to give you a quick update on Tesla. It's right now pre-market, so the market hasn't opened yet. The last 3 days, so Tuesday, Wednesday, Thursday, we saw the stock trading down. You see this over here. Stock was down 1.3%, 0.7% and 3.4%. The market overall, as represented by the S&P 500 here, was modestly negative at negative 0.3, 0.1 and 0.4%. Same pretty much with the tech index Nasdaq, down 0.4% on Tuesday, flat on Wednesday, and also flat on yesterday. So no major market moving news flow really. There was also absolutely no needle moving news in Tesla. And I know the community is very excited about the increase in the geofencing of the FSD service area. But as long as this rollout is under supervision, a lot of investors remain quite lukewarm. I know this will sound very short-sighted to many of you, but this is just my impression from reading what a lot of investors write and from talking to a lot of people. So don't shoot the messenger. I'm just sharing information that I collect and what I can derive from the data. And we get to the data in a second. But before we move on, let's just look at some key macroeconomic drivers. So you can see yields keep bouncing around at the 4.3, 4.4 range. Why do I always go on about yields? Yields are one of the key drivers of the market. When I talk about yields, I typically refer to the yield on the 10-year US government bond. That is the most important yield globally. It's like the S&P 500 amongst the stock indices. The reason why it's particularly interesting is it's a segment of the market that is primarily driven by more sophisticated investors and tends to be less prone to bubbles and bursts, since that segment of the market tends to be populated by investors that take a more long-term fundamental view. That's why I think it's always worth to keep an eye on it. Closely related to yields is the topic of inflation, of course, and inflation is significantly driven by oil price that is. And that's why you always want to look at oil price. And the oil price is a similar picture. We've been bouncing around $66, $67 for quite some time. And the occasional spike or trough is caused by some geopolitical events. And the most recent increase to $1.70 per barrel was caused by Trump imposing tariffs on India in retaliation of India purchasing energy oil from Russia. Now let's look at Tesla. So Monday, stock was up nicely 3%. We discussed already the last 3 trading days that showed a downward trend. Trading range in the last 3 down days was quite narrow. Stock traded within a super narrow $4.4 range. Wednesday was even narrower at $2.2. Yesterday, Thursday, there was a widening to just under $11 trading range. All this obviously then was accompanied by very low volume. So Tuesday 28 billion, Wednesday 27 billion trading value, and then yesterday 27 billion as well. I mean, this is still a huge amount of trading value for pretty much every other stock, but in Tesla that's actually below a normal range. And I think this confirms what I said in the beginning. There was absolutely no material news in TSLA. I know the impression you get when you follow many of the Tesla influencer accounts. You get a completely different picture. But keep in mind, many of them make a living off sharing Tesla content. So their job it is to produce something every day, no matter it's a needle mover or not. But it's fine, they're producing entertainment. And you always have to differentiate between what you watch, listen to in terms of entertainment and in terms of what makes a needle moving impact in terms of investing. So let's look at the share price development since the release of the first quarter results, so the last 3 months. We obviously just got the second quarter results, and we can see that after the first quarter results, the stock reached a new trading level, as I had predicted before the release, and has now been kind of stuck in a fairly narrow trading range after the release of the the launch of the ride-hailing network. You can see nicely how the stock traded up in April until the launch of the ride-hailing network. This was what we almost always see, the typical buy the rumor, sell the news type of trading. Then we reached the end of June, And by the time Tesla's financials were pretty much locked in, because global sales, etc., were already known by sophisticated investors, so they could work out within a fairly narrow range. The EPS and Tesla's EPS ultimately came in exactly where consensus estimated. That's why you didn't see major moves. And then recently, of course, we got the Q2 results announcement, and upon the release of the numbers, there was no move in the stock, and the entire sell-off that was driven by management's quite lukewarm outlook. So that was kind of new information, but that quickly then was priced back out, and the stock returned precisely to the trading range it occupied before the call. So this is all reflected here in this red line, the share price chart, and then the blue line shows you the trading value. And the reason why I always look at how much dollar value was traded, it gives you a sense of how much interest there is in the stock right now. And this obviously only reflects or mostly reflects the segment of the market that does actively trade TSLA. Of course, this excludes all the long-term holders because they're not actively participating in the market, and hence their assessment of the stock, etc., is not reflected in the share price very much. Always keep that in mind. Sometimes I read how people are surprised that the stock goes up so much or goes down so much, even though nothing has changed in their view. But they should keep in mind that their long-term holder view might be very different from people who look at the stock on a, let's say, month by month, week by week basis. So now let's look at the blue line. So the blue line, again, is the trading value. And you can see yesterday it was just under 27 billion. The median is highlighted in this dashed, let's call it green line. It's slightly higher than that. And keep in mind, the median excludes all these huge peaks that you see. For example, there was one trading day. This was the Elon Trump is on Epstein list post. They when a huge amount of investors exited their position, or at least trimmed a significant part. That day we saw almost 90 or 89 billion in trading value. But now we basically returned to like a normal trading value, and currently we trade slightly below that. And when you look closely, after the ride-hailing launch, the stock started to see more frequently below the normal range trading days. And again, this corroborates my assertion that there is simply no material news flow right now, and that keeps this share price stuck. So let's real quick pull up the receipts. I like to hold myself accountable. So this is a post I posted before the 2Q earnings call, this analysis. And I predicted at the time that absent material positive news, for example, acceleration in ride-hailing rollout, I expect TSLA to grow only moderately to a higher level by post-summer and year-end. So this multi-months outlook, at least after the first 2 weeks, so far nailed it. Going forward, I will revisit this every couple of weeks to compare the is state with the estimated baseline. Next, let's just zoom out a little bit. So this chart shows you the weekly performance expressed in weekly dollar change per share, starting from the share price after the first week in December last year. So share price closed on Friday, 6 December 2024 at $789. Here on the right side, you see for each week the key news items driving the stock. I haven't filled out the most recent week, the current week, because again, this is before market open on the Friday. So let's see what happens today. But thus far this week, stock is down 8%. Last week, stock was down, not 8%, $8. Last week it was down $14. After it traded up $16 the week ending on July 18th, which leaves the stock broadly flat since February, when you look right here. So bottom line is not a lot has changed recently. People always ask me to do these updates more often. The main reason why I don't do them more often is because I don't see any need to. So when you hear from me, it's typically because something happened and I want to let you know. But I will not just create content just to engagement farm, etc. My channel is about value add and not about entertainment, and value add in the area of investing. If you're looking for entertainment, my channel is not for you. With that, thanks for listening. See you in the next one. Bye.